Roland, Paul Keating once famously said that fund managers are wine-quaffing donkeys. I'm sure there's a lot of people who don't really understand what a fund manager does and why they should use one. Can you tell us what does your job actually entail?
Yeah, look, I think most people have really little idea what the daily life of a fund manager is and they assume it's you read the paper, come in, look at the screens, and sit behind a desk all day, and that's definitely not the case. I'll give you a good example of what my year's been like. I've probably spent close to 2.5 months overseas this year as an international fund manager, essentially getting on the ground, looking at the stocks that we're interested in, and also obviously helping avoid the blow-ups that have happened. And a good example is 2 trips to China, almost a month in China this year alone. And the reason that was incredibly useful is at the end of last year, at the start of this year, everyone said China's going to save us. The stocks in China were all doing well. The market had gone up considerably. And you're looking at an economy that was doing, at that point, 8 to 9% growth per annum. So incredibly exciting place to be. And a lot of money from everywhere in the world was going into China. So we thought, look, we have to get on the ground to understand these companies. And I'd been talking to a lot of the companies over the last couple of years and got on the plane. And we were amazed at what was happening in China. There's a lot of infrastructure spent, a lot of growth. But a couple of things that we learned from that work was that you could have a fantastically growing economy, but it doesn't mean you've got great stock investments. And a good example was one of the places we went to was a place called Jinjiang City, which is effectively it's a sports shoe capital of the world. They make 500 million sneakers out of this one city alone on the east coast of China. It's about par with Taipei. Now, what was remarkable about this was all the brokers or the market in general love these stocks. There's about 5 or 6 brand name Chinese sneaker companies that want to be the next Nike and Adidas, and they were going fantastic. They had PEs of 10, 11 with growth. They were making very strong profit margins of 30+%. And they were growing in the order of from whether it was 2,000 stores becoming 2,500 or 7,000 stores becoming 7,500, 8,000. They were growing very, very fast. What we learned being on the ground was that 2 things. One, not everyone was buying their shoes. So the story sounded right, but not everyone was buying their shoes, particularly if you thought there was going to be a slowdown coming. The second one was competition inevitably hits you. So China is no different to any other market. If you go back to America in late 1800s to the early 1900s, competition killed the railroad industry, and it's killed a lot of industries over time just through consolidation and competition. So with excess growth, we thought that there's a sector that you really wanted to avoid. And we came back from China essentially saying we're not going to put our money there. And we saved, I would say, tens of millions of dollars on behalf of our investors by avoiding that. So that's the first thing is people don't understand that you have to get on the ground to understand the companies you're investing in. Eyeball the people that are going to be essentially you're giving your money to, as well as their customers and competitors, and make sure that they're going to treat it with respect and do something useful to it. So that's avoiding the bombs essentially. The other part is getting on the ground and looking for the new opportunities that are very, very exciting. And another good example of that is for us we looked at a company in Germany which is essentially a telco, where we realised that Germans, once we got on the ground, Germans probably use their mobiles about half in terms of hours per month compared to us. And I thought, hang on, this doesn't make sense. What's going on? And we saw that that's probably an anomaly that's not going to last forever. There's investment opportunity there. So the other part of that is, as I said, getting on the ground, meeting both the customers, competitors, suppliers, and really kicking the tyres. So that's a substantial part of our work. It's not always getting on a plane. So you do that on the phone. So I'm on the phone quite often at 6 a.m, 11 p.m, talking to companies on the other side of the world, as well as waiting for their financial statements. So there is a little bit of desktop work behind the computer, but there's also a lot of work actually getting out there and actually meeting the businesses that are going to be dealing with your money.